Hey everyone, you've probably heard the buzz, an economic collapse is coming. Every time inflation spikes, markets drop, or the Fed makes a move, people panic. But here's the truth. Smart investors don't fear crashes. They prepare for them. In today's video, I'll break down exactly what an economic collapse actually means, how it impacts your portfolio, and most importantly, how you can protect and even profit when the economy takes a hit. Let's start by cutting through the noise. An economic collapse doesn't mean the end of civilization. It means the financial system is under extreme stress. That can include rapid inflation or deflation, high unemployment, falling consumer spending, credit tightening and bankruptcies, stock market crashes, or liquidity crises. We've seen this before. 2008, 2020, even in the 1970s oil crisis. History shows one thing clearly. The world doesn't end, but wealth transfers. Those who understand what's happened don't lose. They pivot. So what are the signals right now? Rising national debt. Over $35 trillion in the U.S. Central banks struggling between cutting inflation and avoiding recession, corporate layoffs, and slower earnings growth, housing affordability crisis, and geopolitical tension driving up commodity prices. These don't guarantee a collapse, but they do show fragility. The key is not to predict when it happens, but to position yourself so you're safe either way. Here's where strategy matters. Checkmark diversify across asset classes. Don't keep all your wealth in one place. Mix equities, bonds, real estate, and precious metal. Hold cash and liquidity. Crashes create opportunities. Cash is your ammo. Focus on quality companies. Look for strong balance sheets, cash flow, and low debt. Think Apple, Johnson & Johnson, or Waste Management. Add defensive assets. Utilities, energy, healthcare, and consumer staples tend to outperform when things get rough. Own some hard assets. Gold, silver, and even Bitcoin can serve as hedges against currency devaluation. Here's the part most people miss. Market crashes don't destroy wealth. They transfer it. The best investors, Buffett, Druckenmiller, even retail traders who plan right, buy when everyone else is afraid. During 2008, Apple and Amazon were down over 50%. Those who invested then saw 10 times returns over the next decade. So instead of panicking, create a watch list of quality stocks you'd love to own and wait for discounts. Use dollar cost averaging to enter slowly. The truth is, market fear is emotional, but wealth is built logically. If you stay calm, manage risk, and think long-term, economic collapses become opportunities in disguise. This is where great fortunes are made, not lost. So, what's your plan if the market drops 30% tomorrow? Drop your answer in the comments. Are you buying, holding, or waiting? And if you want my personal checklist for crisis investing, grab it free at ITeachStocks.com. It'll show you how to protect your capital and find hidden value during downturns. Don't just survive the next collapse, profit from it. Money decrease.